Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Now, today being midweek, we have a lot lined up for you. The pertinent question looking at Kenya from a macroeconomic perspective this week is really what happened on the MPC decision that came out on Monday. The central bank's MPC committee did cut the benchmark rate by 25 basis points. It's now currently standing at 8.25 percentage points. Now, the question is, what does this mean for you? More especially if you are a creditor, or rather if you own debt or have taken a debt facility with the Kenyan banking sector. A lot of media coverage has actually come out insinuating that you could expect much lower rates on your current credit lines. Well, this is partly true and partly untrue. Consider this. The current environment that we are in, rather after the rate cap repeal, existing loans can be priced off the benchmark rate. In other words, if you have an existing facility, the bank has the leeway to price it lower or at least use the benchmark rate as the premises for pricing your cost of credit. If you are looking to go to the bank today or from here on to get a credit facility, a new credit facility, it might not necessarily come under the current conditions, which is using 8.25% as a basis point. Why is this? The rate cap repeal does say that the benchmark alludes to the fact that existing loans will be priced based on the Central Bank of Kenya benchmark rate. It's actually very open when it comes to new loans. In other words, the banks have signed the banking charter, which allows them to evaluate your risk, give you a score, and be able to price credit based on that score. What are the percentage points that we've had? We've had percentage points as high as 17% being purported by some of the bankers in this town. That's sort of a midway with regards to what you may be paying for, especially as an SME in this segment. Now, when we're trying to look at all of this, there's a lot happening. But the key question here, are you going to be able to access this credit? Now, recall, we're in an environment where we are seeing a lot of houses being auctioned, a lot of assets being auctioned if you look at your dailies. What does that tell us? If I was a banker, it would tell me the economy is not doing too well. The risk factors are possibly going to get a bit higher this year. And what that would tell me is, yes, I would be willing to give you credit, but at a slightly higher price to cover for any eventuality that you lose your income, whether you are employed or you lose your income from your businesses. So yes, the benchmark rate is down. That's a positive. But for you as a consumer of credit, be willing to probably pay slightly higher if you want to access this credit. Now, the pertinent question is this. Are you running a business that is giving you a net profit margin that's way over 17%? I mean, if you're at 30, if you're at 50%, and you have regular income coming from your customers, and you have a growing base with regards to demand, then certainly it would make economic sense for you to take this up. If you are in a business that's a bit more shaky, perhaps you need to go back to your one-on-one when it comes to financial habits. Savings could be the thing that actually saves you out of this. You don't want to be taking out credit when you have unstable revenues that are flowing into your company. But that said, that is the monetary policy. Interest rates have come down. But earlier today, His Excellency Honorable Ambassador Okorie Yatani, who is the Cabinet Secretary of Treasury, did come out and say that drought could possibly affect the medium-term growth rate for Kenya as a country. Earlier last week, he'd actually come out and started the budget-making process by inviting stakeholders for a 3-day workshop to present their sentiments. During this meeting, he did brief the nation and say that he expects us to get to 7% with regards to our GDP growth in the medium term. That's about 3 to 5 years. Now, he's saying that this drought endemic, if it continues to spread, it might actually hamper this growth outlook. Furthermore, he does say that the Ministry of Agriculture has also come out and said it could take us 6 months to cover out and figure out how to deal with this endemic. What does that mean for you if you're looking at the markers today? You have on one side the fiscal saying that we could actually have a cutback with regards to GDP, and that's your gross domestic product, which is really a culmination of the output and productivity of this nation. What that means is that inflation could possibly take up, maybe not tomorrow, but certainly in the short to the medium term. And if I was looking at the MPC, then I would actually expect a reversal of the accommodative policy at some point, largely because the Central Bank of Kenya uses the inflation number as a key metric when they're choosing whether to adjust the benchmark rate upwards or downwards. So as I said, don't be too excited when the benchmark rate comes down. It could possibly go back up much sooner rather than later. Moving back along to the Nairobi Securities Exchange, the market sentiment has been rather muted this week. We had foreign investors who were in the market from the beginning of the month up until last week, and they were largely picking up the blue chips. Safaricom, Equity Bank, and KCB were the largest beneficiaries. This week, it looks like these big ticket buyers are out of the market, and the turnover has actually taken a dive, with it being about 18.9% lower yesterday compared to the opening of this week on Monday. We're talking about 319 million traded in turnover from highs of about a billion or close to a billion, which is what we saw over the last 2 to 3 weeks. Safaricom's price has also come off as a consequence. It is trading, it closed at 29.9 shillings yesterday. Now, when you're looking at investments, the question is, what do all these numbers mean to you? For me, I'm like, where can I get a 10%, actually a 20% return? And when I look at Safaricom, I'm hoping that it comes to maybe a level of 27 and below. Because if I'm looking at a 20% return on this stock, at a price point of 27, I could possibly exit at 33. Now, 33 is not a far cry because it's a point that we saw this particular counter touch at the beginning of the year. What other stocks are possibly candidates to be able to give you a 20% return in the year 2020? This is an ongoing conversation if you want to be part of the NSE. We hope that you can join us for this and more on Friday. That is what we have set up for you. A very special session to discuss how do I open an account and get access to the Nairobi Securities Exchange? How do I actually pick a winning counter? And how do I execute my trades in this particular market? Now, that aside, recall this whole month we've been talking to economists, analysts, bankers, people in treasury, people in the financial sector to help you understand whether you're a business or an individual. What does 2020 portend for you? It's been a mixed bag. There's some people who are optimistic. There's some people who are neutral. There's some people who are cautiously optimistic. But we brought in a lot of information just to help you articulate what is happening with us in as much as GDP is concerned, inflation is concerned, currency is concerned. Now, today we are breaking it down and saying, okay, the Monetary Policy Committee has taken a decision. What does it mean with regards to consumption trends, demand for your goods and services, and most importantly, taxes? This is a conversation that we want to break down for you as a retail or rather as an individual in this economy. And we are joined by Mr. George Munga, who is an economist, to help us understand what we need to consider as we look into 2020. I do hope you can be able to ask us your questions, give us your comments or any feedback on our Metropole TV handle on Twitter, or you could actually tweet me directly, and that is Mbithe Mwema. We hope to see you shortly after this break.